Good morning, everyone, and welcome to this morning's Forex session. Well, it's good morning for us here in the UK, but wherever it is in your part of the world, you are very welcome to join us this morning. Before we start, as usual, may I just draw your attention to the disclaimer that should be on your screens. David, is the disc? Oh, fantastic. Thank you. I was just checking with David as well. As you know, this can be a very tricky business and a very risky business. And please don't ever use money that you cannot afford to lose. So with that being said, let me just start. Let me just take that out of the way. Okay, where are we going to start today? Right. David's been looking at the charts. We've got some stuff that we'll be dealing with later on in the webinar, but I just want to begin with just reminding everyone that one of the nice things, one of the interesting things about the forex market is that it does have this regularity to it. This so that we know in advance each week, each month, the fundamental releases that are coming, are going to be released. Sorry, getting my words mixed up here. And as this is the first week of the new trading month, it is always the PMI. So if you like, if there's anything that we can predict about Forex, I mean, that the price action, possibly no, but at least with the fundamental news, we know what is going to come on, what is on the horizon, as it were. And the first week of the month is always the PMI. But the reason I want to look at the fundamental news is that lately, as you know, the fundamental news has kind of taken a bit of a back seat because of what is happening on the political stage. And we had a great example of a combination of the fundamental news, what is happening on the political stage for two particular currencies, which actually resulted in a fantastic move. And the two currencies that I'm referring to is one is the euro and one is the Canadian dollar. Now, I did actually do a post about it yesterday on my site, but what I actually also said that the move in this particular pair didn't just happen, wasn't the trigger for the move actually happened the day before. Very, very briefly, and I'll just bring it up here as well. Let's have a look if I've got it here. In fact, no, let me bring the charts up, which are far more interesting, and put up the daily chart for the Euro Canadian. There we are. That's it. This is the chart of the Euro Canadian. And the reason I highlighted this pair was because this is Friday's candle, which was the release of the GDP. Then we had the gap down. We also had the issue with Italy and its budget plans, or its decision that it wants to exceed the amount that they can spend, if you like. There are all these EU rules about what individual countries can and can't do about their domestic budgets. It's quite interesting that when Italy, and I speak here from a personal perspective, as I am of Italian heritage, my parents were Italian, is that when they want to bend the rules or break the rules, it's all no, you can't do that. But when certain other countries want to bend or break the rules, then it's kind of glossed over. So there's a lot of that in the background as well. This was over, then this we had the weekend, and this was the candle, and the move in the euro was pushed lower because we had NAFTA. We had this agreement over the weekend with Trump and Trudeau coming to what seems to be an agreement to a new deal for North America, which is Mexico, US and Canada. But the move from a technical point of view was back here on the Thursday, which I know was the initial news about Italy, but we have this really nice bearish engulfing candle, and then bang, the fundamental news, the political landscape really pushed this pair lower. And in fact, at what we can see at the moment, there is now a bounce higher. We can see the bounce higher. We have the candles here with the wicks to the bottom, and in fact, it didn't go through our S4 support and resistance indicator. But when you see a move like that, a dramatic move like that, given momentum, given extra oomph, if you like, from fundamental data and political events, and you see these fast moving moves, this is where you really earn your money as a trader. You might have missed that. You might have said, "Oh my goodness," you stand back and you wait until it's time to go back in, and this is where you have a cool head and you go back in, because the support and resistance comes in, the VPA lessons come in, you can see there's buying, and if you've got the quantum indicators, if you looked at the heat map, which I've got a picture of here. Now this was the picture of the heat map that was actually on my post, and you can see the Euro Canadian down at spot 25. It went a little bit lower, and at some point this is going to reverse, and this is what we are seeing at the moment. Now it may just be a temporary reverse, but as an intraday trader, at least you feel there is an opportunity to take a trade to the upside. Now for the euro today, as I said, although it's PMI this week, 11 o'clock I think is the crunch time, because I think there's some data coming, there's some more news about what is going to be happening with the budget plan in Italy. So a little bit of a roundup. I've gone on a little bit about that, but we'll have a look at the live edge of the market and see what's happening. But it was just a great example of what David and I call the 3D approach to this market, to any market, and it's something we cover in very great detail in the Forex program. How you start with the technical picture, you have to get a grip with understanding price action, volume, and everything else that is part and parcel of technical analysis. Then you bring in the fundamentals, then you bring in related markets, and oh, by the way, of course, being the CAD in this pair, it will also have had an influence from the oil price, which is rising. And then on top of that, you have the political landscape, the geopolitical landscape as well. And you will get to that. You will get to a point where you will be able to put the price action into this three-dimensional model that is trading. But I'm actually going to pass over to David. I think he's got to say something about this as well.
Apologies, I was looking for my go to webinar icon. I couldn't find it, so many apologies. A very warm welcome from me, and just to highlight what we do here, in case this is the first time you visited us and joined one of these webinars. We do focus much more on the MT5 platform, which is the one that Anna has, but I've got NinjaTrader running as well, so we kind of flip-flop between the two. And as always, if you do have any questions, just drop them in the chat box. And if they're longer questions, we will answer them on air for you. While Anna's been talking, I've just been hunting around, looking at various pairs, particularly on the euro. And I have to say at the moment, it's a question of being patient. Do you want to flip over to Ninja, or do you want to stay there?
Is that okay?
Yeah.
I'm going to look at the pound.
Just going to change. Anna's going to look at the pound. I've just been hunting around on the euros, and it's. I think the word that sums up this morning is patience. Let's just show my screen. It should be coming up. There we go. I'm just looking over Anna's shoulder. There we are. And this is really just a classic example of what we're seeing at the moment. This is the Euro Aussie, but I can assure you it's very similar picture to, I've been looking at a lot of the yen pairs as well. If we go to the Euro Yen, for example, we had quite a strong move from 3 o'clock overnight our time. This is on the Euro Yen. This is a 5-minute time horizon. So we're looking at the much faster time frames now. And as you can see, the picture we're seeing is very similar, as I say, particularly across the euro pairs. We're seeing strong price congestion. We're seeing these very strong levels of support and resistance building. We've got resistance overhead at the just above 130, 180, 182 area. And we've got this support platform in place below, and we've got another one here. This is at 55. This is at around about 60. And as you can see also, I've got the VPOC on the chart. The dashed line is the fulcrum of the market, and it just gives you that picture, that very clear and concise picture of what is going on right now. Clearly, The market on euro yen is in price agreement. The yellow dashed line indicates that that is the fulcrum of the market right now, where we've got the heaviest concentration of volume, which you can see here, which is building all the time. And what this describes is it's very much like a seesaw. If you imagine a seesaw, the yellow dashed line is the fulcrum point in the center of the seesaw, and at the moment it's pretty much equally balanced. The bullish and bearish sentiment for the euro yen right now is evenly matched. So there is no directional bias right now. The seesaw is not swinging heavily in one direction or in the other. So the weight of market sentiment now is equal. At some point that will change. Bullish sentiment will take hold or bearish sentiment will take hold. And that will drive the pair away from the fulcrum. And that, of course, will be flagged with volume, which is always needed to drive a market one way or the other. But for the time being, that's what we're seeing. It's very clearly defined. The other thing that we use a great deal, and again, it's something we explain in great detail in the program, is using the little pivots to actually help you understand where a market is at the live edge. As we came up here at 3 o'clock, there was this strong move, very bullish, bearish for the yen, bullish for the euro, and that was reflected pretty much across all the yen pairs. We then get a pivot high come in here. Now at this point we don't know whether this is just a temporary pause. The pivot here is just a very simple indicator based on the 3 candles associated with it. In other words, the center candle and the 2 either side. And it will trigger when you get a higher high and a higher low to the center candle, and equally to a downside candle, a lower high and a lower low. And the way we use it is very much to help describe at the live edge what is going on in terms of the price action. Are we moving into a congestion period, or are we just seeing a temporary pause? That's probably because I haven't. Oh, I haven't got my microphone on. Can everyone else hear me okay? Sorry, sometimes I rabbit on for hours with the microphone switched off, which has been done many times before, I can assure you. But if you could just click yes, you can hear me okay, that'd be great. Because one person can't. Okay. Brilliant. So that's the way we use the pivot. It's not an enter and exit signal. It's merely an indication of temporary weakness in the price action or temporary strength in the price action. And as the market moves into a price phase, we then use it in conjunction with everything else to help us to understand whether we're moving into a congestion phase, merely a temporary pause point, continuation of trend, etc., etc. So these little pivots are important in the sense of understanding where we are. And then, of course, we bring in support and resistance to help to understand what the levels are, where they're building. And what the VPOC does is then brings in the other element of volume in association with price-related support and resistance. Because where we have very well-defined regions of volume, either high or low, that then gives us a sense of what is likely to happen once the market approaches these regions. We saw down here we had volume building, but then as the market moves up to this region, it goes through there pretty quickly. Then we start to build further. Now we've got a big region of volume building, which is the greatest volume on the VPOC itself. We've got price support and resistance above and below. And should the market start to move higher and move towards these lower volume areas, then from a volume perspective, we would expect and anticipate the price action to move through there fairly quickly. So it's all about anticipation. It's using the indicators to help understand what is like to happen next. In terms of the volume, you can see that it's all a little bit, this is Asia. This was the big surge in volume at 315, or between 3 and 315 at any rate. We're starting to see a pickup in volume as Europe gets underway here, but nothing exceptional. And of course, as London gets underway, then we'll see a further volume coming in at that point. So that's on the euro yen, but as I said, it's pretty much universal. Let's have a look at the euro CAD. Anna mentioned earlier on. Excuse me, I'm just going to switch off for a moment. There we go, back again.
Sorry, just if you want to say, euro caught a bid because the papers were saying in Italy that they kind of allegedly rode back.
I'll just pass back to Anna for a moment rather than me repeat.
Sorry, I just wanted to mention to David, the euro seems to have caught a bit of a bid because it's all to do with the Italy's budget plans. I mean, essentially, they want. There is this rule, or a percent rule of for the deficit, and they want to push it out to 2.4, but instead it's supposed to be 2%. And there was I think there was a report in the papers of that they've kind of rode back, that say they've rode back on that they don't want 2.4 over the next, I think, up to 2021 or something. Anyway, basically it's a bit like Brexit. Rumor, speculation, press reports, statements. You're going to see an awful lot more volatility, particularly as I said, with the euro. It's always been said for the past sort of year and a half, that Italy would be a real sticking point for the eurozone and the euro. Greece was, sad as though the situation was for the Greeks and the Greek economy. They were never really going to pose any real threat to the eurozone and the euro. Italy is a different proposition, and many commentators have been kind of waiting for a situation that we have at the moment in the country. So lots of volatility. You've got volatility on the euro. You've got volatility obviously with Brexit on the British pound. And as I said, and David has said, the fundamental news kind of pays second fiddle, as it were. It's really only I know the States, we had the thing with Canada, and we've got issues with China, with tariffs and what have you, but the dollar at the moment is pretty much being driven by fundamentals, isn't it, David, with power statements and what have you. And this is just something you have to get to grips with as a forex trader. It will come. It doesn't, if you know where to look and how to apply this knowledge, it will just help your trading immensely. So I'll just pass back to David.
Thanks, darling. And as Anna was speaking, I was just flicking through, as you probably saw there, flicking through the euro pairs. Let's just head over to the CSI. This is on fast-minute time frame, faster time frames. I've got this on the 10-minute, so not the fastest, but just to give an idea, a sense of what is going on. And as you can see, it's pretty much reflective of the flip-flopping around that's going on right now. Really across the piece, we get a short move, and then it flops over again. You can see the Canadian here is just twisting and turning in the center here. We had a little bit of a rally on the dollar. If I pull the dollar index up over here, we had this little sort of minor move up here, and then it's rolled over again. So the dollar's in congestion. This is on all of this is on a 5-minute time frame. So it's we're not looking at the slow time frames here, just literally on the faster time frames. And it is a question of being patient. If we go to the yen index, just have a quick look there. Looks as though it might be, we've had this congestion phase, could be dropping lower. We're seeing that reflected on euro yen, which is trying to claw its way higher. And if that does manage to break through sort of 132 area, and the yen index continues lower down to the 80.25 area, then that'll be reflected pretty much across the yen pairs, purely because if the yen index is moving, then you're going to see that largely reflected across the complex. So maybe the euro yen is perhaps one to consider. If we go over to the array, this is on the 10-minute, and the nice thing with I've isolated out the yen here, I can put the whole lot on there. There we go. That'll give you the whole picture of 28 pairs. And as you can see at the bottom here, we've got the New Zealand CAD, which is very bearish right now. And we've got the Euro Yen. We've got another Euro New Zealand. We've got Pound Yen here. And we isolate out the Yen. Just flick that off. And the nice thing with it on the array is because the Yen is always the counter currency, then you get a very clear picture of sentiment towards the Yen across the array, across the complex, in other words. So is the market universally selling the Yen, or is the market universally buying the Yen? And you'll see that very clearly and instantly displayed on the currency array. What the currency array also tells you instantly is the strength of momentum in the move. The steeper the line, the stronger the momentum. The flatter the line, then the less strength in that particular time horizon. Of course, we're just looking at one time horizon. You'd be looking at this across the piece. So if we just go and take a quick look at that's the euro dollar, you're starting to see a little bit of momentum coming in, but let's just flick that over to euro yen. And the pound yen as well. Anna says there's been a move going on in the pound yen. As always, if you're trading the pound yen, indeed if you're trading any pound pair for the next few weeks and indeed the next few months, you are going to see volatility. It's inevitable. It happens relentlessly. And the other thing which happens almost equally relentlessly is the fact that if you get volatility intraday with a very sharp move, I was going to say you can almost be guaranteed that it will reverse, purely because it is a mechanism for the insiders to make money based on a strong piece of data coming out of Europe. Someone says something, the market goes, oh, wonderful. The market makers jump in, wrap the price up, and then gradually over time it deflates. And generally speaking, it's associated with the volatility indicator, which just reinforces the whole message that that is what you're likely to see. You are likely to see price action move back inside the spread of the candle. This is the euro yen, starting to see potentially a move away from the volume point of control. Let's just go and have a quick look at the pound yen. Same time frame. The nice thing with Ninja is that literally you just click in, you just type the currency notation onto the chart and it instantly changes. That's what we're seeing on the pound yen right now. As you can see on the trend monitor at the bottom, we had this pause point, didn't really flicker. It stayed resolutely blue for the time being. But of course, that could change in an instant if someone says something in Europe. It could rocket, it could collapse. You've always got to be aware of that, which is why you've got to have stops when in all markets, but even more so with the pound yen. If you're on the right side, you'll make money very quickly. If you're on the wrong side, you'll lose money very quickly. It's as simple as that. It is the most volatile of all the currency pairs, and probably doubly so right now, given the political backdrop to the British pound. And as always with volume, you know, we've got to deal with this. What we can do sometimes, if you want to, is if we extend the chart like that and take out the distortion effect, if you will, of, let's just take another one out. There we go. So we've now taken out the 3 o'clock impact, if you will. Then you're left with a clearer picture, if you like, of the volume profiles as we get into Europe. So what we're looking at in terms of comparing volume, then from 7 o'clock onwards, we know we're into the European session. So we're comparing like with like. We can't really compare this volume with what's going on over here because this is Far Eastern Asia, but we can compare volume here from 7 o'clock onwards. And obviously as we get into London, it gives us a much better idea as well. So that all looks okay. There's no great anomalies there at the moment. We had a little bit of weakness come in here. We had a bit of weakness to the start of the session where Europe opened up with the wick. These last two candles, decent volume, decent price action, nothing particularly scary under there. So that looks reasonable for the time being. So that's the pound yen. Let's just go and have a look at the CSI. Obviously, from a CSI perspective, what we are looking at is the British pound is very, very heavily overbought. That's not to say that it's just going to roll over and deliver us a nice move to the downside. But what we are seeing for the time being, at any rate, is some strong buying in the pound, and that is counterbalanced. Just move that out of the way. And that is counterbalanced by some very decent selling of the yen down here at the bottom, which has got some way to go before it gets down to this 20 region, which is not a hard and fast barrier to say that, look, when it gets to that point, it's an oversold currency. It just gives us a sense of the fact that it is approaching an area where it might be considered to be oversold, and equally at the top where 80 is considered to be moving into overbought. Sorry, darling? Yeah, sure. Sorry, I've been rabbiting on the GP. Solid, right. On the pound yen, this line here is the volume point of control. As I said before, the simplest analogy that I can come up with is a seesaw. If you imagine a seesaw which has two people of equal weight on either side, then the yellow dashed line is the fulcrum of the market, because at that point the pair or the market you're trading has reached price agreement. In other words, there's no bullish sentiment, there's no bearish sentiment. One is not driving the market. They are both equally balanced. So sentiment towards the pair is in agreement. There isn't sufficient bullish sentiment to drive it higher, and there isn't sufficient bearish sentiment to drive it lower. And that's what the yellow dashed line denotes. It denotes the point at which the highest concentration of volume has been built. In other words, the price action has probably remained there the longest, and we've seen volumes building around the fulcrum of the market. And what's required to take it away from the volume point of control is then volume, which drives the market as either bearish sentiment takes hold or bullish sentiment takes hold. And that is then reflected in the more linear relationship between volume and price, which is the candle and the volume related, and obviously groups of candles and groups of volume bars. And then as we move up through the histogram, this is on 5 minute. You'd be looking at this in multiple time frames. Of course, you go up to 10, maybe up to 15. You want to see what's ahead in terms of the volume profile on the slower time frames, because you want to see whether the market is going to run into difficulty. In other words, if it's running into an area of high volume, then the market is likely to pause. If it's low volume, the market is likely to go through there fairly quickly. And then below that, you've got the trend monitor, and obviously you've got the various levels up and down the chart. Let's just go back to, let's see what's happening on the yen index at the moment. Starting to see that that drop away. It's not moving dramatically, but it's certainly just breaking away from this congestion phase for the time being. This is on the 5 minute time horizon. Just see what's happening on the dollar. Not really doing a great deal. That's in congestion on 5 minute as well. And that's the euro index itself, which, as you would expect, is mirrored. I've got the euro dollar above, and I've got the euro index here, and as you would expect, it's pretty much mirroring it in lockstep as we move in the congestion phase for the time being. Let's just head back on over here. We've still got the buying in the pound. You can see up here, got a little bit of buying of euro coming back in. We've got the Canadian as flip-flopping around in this region, up and down, up and down. So when you start with the currency strength indicator, which is always the starting point, because it does isolate out, this is a complex market, but what the CSI does is it breaks out the individual building blocks of the currencies themselves and shows you them in isolation, strength and weakness. That is the starting point, and from there you then start to build the picture in terms of a currency that might be of interest, a currency pair that might be of interest, and then you start to move into looking at it through the prism of the currency array, of the currency of matrix, where it sits on the currency heat map if you're a longer term trader, a slower term trader, rather than an intraday trader, and so on and so forth. It is building up that picture. And all we're seeing at the moment is we're seeing the yen continue to fall. The pound is continuing to rise. We've got the euro picking up a little bit. The Canadian's flipped over. We can see the dollar here is really just flip-flopping around in this region. So really the only pair at the moment, or certainly the currency to focus on at the moment, is the yen for the time being, but always with half an eye on the fact of how much further have we got to go. If we go down to a faster time frame, let's put it on the 5-minute. Just pull that up. There we go. What we're seeing on the 5-minute is the fact that the yen is now well into oversold territory on the 5-minute time horizon, and the pound is very strongly overbought. And this is a facet that you have to deal with in terms of multiple timeframes, whether it's multiple timeframes on the charts themselves, whether you're using a blended approach, you're using Renko, you're using tick charts, you're using multiple timeframes, whatever it is. And that equally applies to using the indicators themselves, because you have to have an understanding that what happens in a faster time frame, if it's a change in trend, if that's what you're looking for, if you're looking for changes in trend, then it will happen on the faster time frame, and ultimately it will flow through to the slower time frames. Another analogy that I've used many times is the pebble in a pond. If you throw a pebble into a pond, you see the ripples, and that is exactly how it happens in this world that we trade in. If something happens in a very fast time frame and it is a change in trend that filters all the way across the time horizons, then you're going to see it. But you're always constantly looking for what is going on ahead of me, what is going on downstream, upstream, to give you a sense of the changes in sentiment that are constantly happening. Now, from a slower time frame perspective, you may well not be interested in what is going on a 5-minute time frame or a 15-minute time frame, because what you're seeing there is potentially only a minor reversal or a pullback in a longer term trend. And that's what makes this market so difficult, and indeed trading in general, because a trader will be a faster time frame trader will be short in one market, whilst a slower term trader will be long in the same market but looks at it from a different perspective. And you have to decide what it is you're trying to do as a trader. Are you an intraday scalper? Are you scalping this market at this point? Or are you looking at it as a longer term trend or swing trading opportunity? And in addition to that, you've then got to decide what tactical approach you're going to take to the market. Are you looking for reversals? Are you happy to take the additional risk of getting into reversals? Right now, for example, if you're a reversal trader, you might be looking at the pound yen as an opportunity to go short, because the pound's very solidly overbought and the yen is very solidly oversold. The consequence of taking that position in the market on this faster time frame is that you will have to put more risk on the table, because the possibility is that the market may stay in this region for some time before rolling over for you. And the consequence of that is that you set your stop loss a lot wider. The benefit is that you get into the market trend a lot earlier, because you've put more risk on the table. You're prepared to take that risk. You're prepared to be patient, and that patience pays off, and that extra risk will pay off because you will get into that trend earlier. Now, if the pound yen rolls over from here, then you're in the trend on the first stop on the station, if you will. You're getting in as the train is getting underway. Other traders will be getting into that market once it's underway at stops further down the line, to use the train analogy. And what they've given up is they are taking a smaller risk because they don't have to set their stops so wide, but they're getting in later into the trend. So that's always the payoff, that you've got to, trading's about risk and reward, and it's the facet applies in every different aspect of trading, and that is particularly one. So, okay, let me pass back to Anna.
David couldn't have picked a better example with the pound yen, because it really is, as he was saying, it's down to your time horizon. In other words, what we mean by time horizon is how long are you anticipating wanting to be in a trade. So as a day trader, clearly you're going to be, your focus is going to be on the shorter, on the faster time frames. Swing, maybe a day, maybe two, and then obviously if you're longer term. And the time frames you'll be looking at, I think, but it's not a hard and fast rule, is that if you're going to be you're not going to be in very long, you just want to grab some pips and move on, as it were, then you're going to be looking at using a combination, as we have here, of a non-time based chart, such as a Renko, which is this chart here on the bottom left, with one of the faster time frames. I've actually got the 3 minutes. Some people use the 1, the 5 and the 15, and I kind of benchmark that. I don't tend to go above the hour. Sometimes I'll even reduce that down to a 30-minute chart, and it's a really good example. Now it's a good example in the sense that we can see what is happening on a faster time frame by what the CSI is highlighting. I've got it on the 6 minute here, where we can see the pound seems to be turning over. We've got these extremes for these two currencies, and that's what we actually want to see as well. And when we look at the 3 minute chart for the pound yen, that overextension there is also, you can see the pair. We have this shooting star candle here. We also have this support and resistance. We've been talking about support and resistance, and I've been thinking about it, and I think next session I'm really going to look at it and how you can use it. I mentioned in our session yesterday is that there, again, it's one of these elements of technical analysis, but also we have, it's an integral part of volume price analysis, is that there's no right and wrong way of using support and resistance. So at the moment you could say, well, 148.06, this solid line on the support and resistance indicator, which is purely price based. It's not like the VPOC where we have a volume, price and time. Now you can see here that the pair sort of ran into this resistance, but it also coincided with what we saw over here on the CSI. If I move this down to the 3 minute chart as well, we have developed these indicators to blend in with the our methodology. Now, as a trader, many traders will look at that, will look at this resistance line, which has been drawn by our own SNR line, SNR indicator, but it could be a Fibonacci, it could be a Camarilla level, and say, do you know what, that looks a solid resistance. When it gets to there, I'm actually going to sell against it. When it gets to a support, I'm going to buy on that support. And we've got a really nice example here when it was down at the, in fact, R2 with the Camarilla at 147.69. And then everything else follows through with regards to the indicators. They do, as they do integrate very, very well. But the decision you have to take is when these signals appear on your chart, as the signals are appearing now, you say, well, what am I going to do with those signals? Do I, as David said, this is, when you hit a resistance, when price hits support, that is a reversal. There is a reversal of sentiment. There is a reversal of participation in this move, either higher or lower. So you say, well, do I like that? And is that also that, is that validated by VPA? What do we see under that shooting star candle? It's got a deep wick to the top of the candle. I'll just see what the volume was underneath it. I just pick that up, hopefully there. Yeah, I mean, we do have to, the volume is comparative and relative to the session. We're waiting for London to open at the moment, but it's a reasonable amount of volume. This volume took the candle that much higher. Then we had a smaller candle. Volume was also falling away. And then we get the shooting star. By virtue of the fact that you have a wick to the top of the candle, tells you there is potential weakness ahead. Now, it did actually go through that resistance line, but it came and closed just above it. But support resistance lines, they're not set in stone. You do have to be a little bit, give them a little bit of leeway, as it were. But that looks like a perfectly reasonable setup, given that our other indicators, namely the CSI and also the Renko here. Let's have a look here. We've got this this congestion period. We've got the pivot up here. Is also saying, do you know what? There is potentially, potential for a short, but there's always a but. Yeah, but that's on. Oh, sorry. I do beg your pardon. What is the matter? No. Let me change my raincoat. I shall pass over to you. I'm really sorry about this. I don't know where my yen raincoat's gone. I do beg your pardon. Oh.
Just going to flip screens back to Ninja while Anna sorts out that one. Should be. Have you got my screen up? Yep. Okay, there we go. Just move the chat box out of the way. Just leave the pound yen up. This is on big size. That was the move there, but I've just, as I said earlier, I've just scrolled it back a little bit so we can get a sense of what's going on. What's the time now? 7:58. So there's 2 minutes to go to London. And if you were thinking about taking a position right now, I would suggest it's probably not the thing to do, because it's a question, once again, of being patient, waiting for the volume to come in on London, and then to see which direction the markets are going to take the pound as London markets open up. And the session crossover is a classic point. You've probably heard us say this many times before, but if you haven't, the crossover session is the classic point for yet another trap to be set and sprung, because that's what the market makers and insiders want to do. They want to make money for themselves, not for you. You have to be aware of it. You have to play the same game as they're playing, understand it, which we cover in the Forex education program in detail, and then you won't be caught when the trap move suddenly springs and you're caught on the wrong side of the market again. And this is just one of the big points. Same thing happens at the US session as well, 1 o'clock, our time at any rate, as US markets get underway. But it's classic. You see it pretty much every day. And what generally happens is you'll see a strong move in one direction, and you often see a trap move going in the opposite direction fairly soon thereafter. So we're just opening up now. There we go, 8 o'clock coming along. Let's just have a quick look at the CSI, see what's going on, what's driving the market. What's driving it at the moment? Clearly, we've got very strong buying of the yen. As we noted, this is on 5 minute. Now, if we go up to the 10 minute, as I mentioned earlier on, you can see there the pound rolling over. So we're coming out of overbought, and the yen is rising very strongly. Indeed, we've a little bit spoiled for choice at the moment, because we're now starting to see all the markets react. We're starting to see the Aussie, the commodity currencies are starting to, certainly the Aussie and New Zealand at any rate. Canadian dollar hasn't done much, but certainly the Aussie and New Zealand are starting to fall pretty strongly. They're falling with the euro. We've got the yen rising strongly, the Swiss franc starting to rise, the euro selling off, and the pound selling off. We go over onto 10 minute. What are we seeing there? As I said earlier, and it just really highlights the point about looking across multiple time frames. You have to use multiple time frames. Whatever you're doing, you've got to use multiple time frames. This is starting to react, but it's not as dramatic as we're seeing on the 5 minute, because what we're seeing on the 5 minute is the first sign of move. As I said, that's where it happens first. If that is a longer term trend change, in other words, in the context of a 5, 10, 15 minute trader, then this will develop further. What's interesting is it didn't actually get to overbought the yen. The pound certainly was overbought, beg your pardon, but the yen didn't actually get to oversold at the bottom here. There's nothing in the rule book, there's nothing in the playbook that says that it has to go here, or it has to go here, or it has to go here. This is now reversed, and it's reversed because it's reversing on 5, and it's reversing strongly. And if you go to the currency array, what are we seeing on the currency array? We're seeing that reflected. We've got pound yen, we've also got euro yen. If you look at the ranking on the left-hand side, euro yen is the strongest riser at the moment. And again, this is on 10 minutes. On 5 minutes, you see a very similar picture. You probably see them all stacked to the top. I won't change it because I'm going to pass back to Anna right now. But you can see you can get a sense of what is going on. This is like a windscreen wiper on a car. Use another analogy. It really does sweep back and forth. It's like a radar system. If you've seen a radar in action, you'll see it sweeps around like this 24 hours a day, constant. This is what it does. This is the sweeping movement of sentiment towards the yen as it ebbs and flows throughout the session. You'll see it on the ranking ladder here, and what you want to see on across the multiple time frames is all of these marching northwards, joining their brothers and sisters up at the top. And what you've got on the second ladder here is a sense of at what point these pairs are reaching a potentially overbought position or a potentially oversold position. And those are signaled either in the darker color where it's in brackets, or whether it's reaching that position in the brighter colors of blue and red. We haven't got any red at the bottom at the moment, but we're certainly seeing one or two blues starting to appear at the top there. And you'd also be looking at the currency matrix. Let's just highlight, this is on a very fast time frame. Let's just flip that over to the yen. Let's just put that on there. Let's just put the whole lot on. Let's just change this up to 5, make it a bit more, move it away from the market a little bit. Let's just highlight the yens out there. And you get a similar picture there. You've got the euro yen here, we've got the pound yen is mid-table, and what we're looking for is we're looking for all of these pairs to be moving in the same direction northwards if this sentiment for the yen continues. Just going to pass back to Anna at that point. Let's just go back to the chart itself. There we are. Surprise, surprise, what are we seeing? We're starting to see volatility come in because we've got London, and we're starting to see a potential reversal once again. As London gets underway. Just going back to MT5.
I apologise about that. I had it. In fact, I'll show you how it's the Renko that we've developed for MT5 is absolutely brilliant. It's so easy to apply, and I was happily applying it, but I'd forgotten I still had the pound dollar on there. Anyway, right. Pretty much the same actually, because we had talking about the resistance line that I was referring to here back on the 3-minute charts. This was at 148.06 here, and we're talking about support and resistance. And when I'd realised what I was going to say, David picked up but. This was a but in trading. That from a technical setup and from a potential use of a strong line of resistance, perhaps to take a short against it, fine, except we were a couple of minutes from the London session, and but just reading up to the London session, I said this is just a 3-minute chart, nice little move, not a lot of volume under those candles, which would have also made us perhaps a little bit suspect. But then they're also distorted by the surge that comes in London. What happens is immediate reversal triggers the volatility indicator. Volatility indicator is triggered when the move is outside of the average true range. That's where the trap is. Everyone would have seen that. They would have looked at their charts and said, oh yeah, they might have seen the shooting star, perhaps not use volume with it, just use the candle patterns. Oh, shooting star, yeah, well, that looks nice, a nice little move lower. Oh, that strong was it. Maybe it's even coincided with a fib level or some other means of, or even a hand-drawn resistance line. But it came off, it's tested it 1, 2, 3 times. Yeah, it's a reasonable assumption to make, but if you don't understand what happens in these crossovers, yeah, you would have been, oh, that's a nice little trade down. Yeah, fine, okay, and suddenly bang, 8 o'clock, that happens, your stop's taken out, and you think, oh, I've missed that one again. But it's really not your fault. Now the decision now is, as we wait for it to calm down, we also know the PMI is coming up at 9:30 as well. What happens with volatility? tends to be the first reaction is the price goes back into the spread. It's, you know, you've had this burst of energy come into the price action. It has to calm down. It has to settle again. And what it tends, how it settles is it moves back into the spread of the candle. Then possibly it can lead to a reversal, or the original trend is then picked up again. And you know, we still have this resistance up here at 148, and how this is mirrored on the Renko, because what the Renko does, it takes away that noise. The resistance was here at 148.03. We have this is a little move lower. It's kind of moving sideways now because of the volatility. But on the hourly chart, as we see here, we had this this candle here. This is the 8 o'clock candle. Obviously, the price was moving high. This was the move lower. We've got the wick to the top of the candle, but you know, it's trying to regain the kind of you know, the bullish the move away really from this congestion period at 147.65. Not a very strong resistance support line, because it's hatched. We've developed this indicator to try and give us some idea of whether the resistance and support line is it strong or is it not so strong. And we've done that by either, when it is a solid line, we can deduce from that there is, you know, it's going to need a little bit more effort to go through that. Now, if you were, as I said, depending on your time horizon, if you had decided after this period here you were looking to go long this pair, you know, would you be concerned about this, you know, the pullback that we see here in this in this spike to the top of the candle? No, because you know, your horizon, you're looking up to here, you're looking at 148.15. Maybe if you're long, maybe you'd be thinking, that's a strong ceiling for this price. Perhaps, you know, I'm going to revisit it. Maybe I'm going to come out. Or if you'd missed this move higher, this not a huge move, but you know, enough of a move, maybe you're going to think, do you know what? When it hits that, is there possibility for you know, to take a short at that point? So that's what I was going to say on that, David. Do you want to add anything to that? Yes. Sorry, talking about support and resistance. These support and resistance on the MT5, MT4 platform with these lines, they are pinpoint accurate, but they're just based on price. The equivalent, or a similar indicator that we've developed on NinjaTrader, it's more sophisticated, but you can't, the two platforms, it's a bit comparing apples and oranges. They will deliver the information that you need, but they deliver it in a different way, and we call that the accumulation and distribution indicator. But it fulfills the same function, but it also gives you some additional information as well. But I'll pass over to David and the screen. Is that okay, love?
Yeah. Back on the Ninja screen, just looking over on Anna's shoulder, that looks fine. I've just gone back to, we're on the 5-minute CSI here, and really just what I wanted to highlight was the fact that we've been looking at the pound yen, which is fine, that may well be the pair to choose. But when you look at the CSI, certainly on the faster time frames, it gives you a sense of what pairs to consider and what pairs to avoid, perhaps. Because what we're seeing now is we're seeing the pound starting to rally again back into the overbought region. The yen here is starting to flatten off a little bit. But in terms of yen pairs to potentially consider, what you're also seeing here, which is much more interesting from a trend perspective, is that you're seeing very strong selling in the New Zealand dollar, very strong selling in the Aussie dollar. So if you were looking for a yen pair as a speculative intraday trader, then those two pairs would be of more interest right now probably than the pound yen, because what's happening with the pound yen, you're just starting to see the pound rise, but you're also starting to see, obviously it's rising with the yen. And that's the reason that you're starting to see a congestion phase building, because what the CSI is telling you is if you've got divergence between the two currency pairs, or the two currencies rather, then you're going to see a trend. And if you've got the two currencies moving in the same direction, generally what you're going to see is a congestion phase. So for example, if you were to, I don't need to look at the chart, if you obviously look at the pound dollar right now, you've got some strong buying coming in on the dollar, but you've got a move on the pound. Now the strength of buying in the dollar may be enough to actually develop a minor trend in cable, but it's not going to develop as strong a trend as if these two were diverging strongly. It's a little bit like the train track analogy, where you've got the train track running in the same direction, the two lines are running the same way, and when you've got two trains on two tracks running in the same direction, the trains may have a differential speed, but they're not going to move at the same differential speed as if they were moving in opposite directions, and that's what it comes down to. So if you go over to, I've pulled up the Aussie yen here, we're starting to see some moves there back against the trend. But if I put the New Zealand yen in as well, you'll see a similar picture there. So from a trading perspective, you know, this is a trend that's building. It's an easier trend to trade because you understand why it's occurring, because you're seeing strong divergence between the two currencies involved. You haven't got the two currencies trading in the same direction. We're starting to see a change in color on the trend monitor. I've got this set to pretty slow. In terms of all the indicators, if I just pull up the trend monitor here, this is pretty much built into all our indicators. The sensitivity aspect on NinjaTrader, it's sensitivity congestion, and it starts at 0, and you can set this to smooth out the congestion phases, so deliver trends as they have been more well established. You can adjust this on the trend monitor, on the trends. You can also do it exactly the same way on MT4 and MT5. I think the default there is 20. You can toggle it. It's like a fine tuning on a volume on a radio, for example. You can fine tune this. So what it will do, it will smooth out these transitional colors and then deliver trends when they are more established, if you will. So I just wanted to highlight that. Yeah, divergence. On what I mean by divergence is where a currency, if we take New Zealand yen, which we were looking at, we've got this very strong selling of the New Zealand yen. New Zealand dollar, I beg your pardon. This is the grey line. This is the New Zealand dollar. And the magenta line here is the Japanese yen. And what you're looking for on the currency strength indicator, certainly if you're a trend trader at any rate, is you are looking for this divergence. In other words, one currency is falling, the other currency is rising strongly. The dollar, for example, is rising very strongly at the moment. New Zealand dollar is falling very strongly. The blue line, the Aussie dollar, is also falling very strongly. So if you looked at those charts, you would see that trend on the chart itself, because you have one currency which is being bought strongly and another currency which is being sold strongly. And the steepness of that line will tell you how strong that strength of buying or selling is. So as far as New Zealand dollar is concerned, it's very strong at the moment. There's a lot of selling of New Zealand dollar. You then go over, obviously, to something like the currency array or the currency matrix to establish whether that buying or selling of that particular currency is universal across the complex. If it is, it means everyone is buying or selling that particular currency, which is where you want to be. There's nothing wrong with trading a currency which is moving in an opposite direction, but you need to understand that before you actually get into the position. I'm going to pass back to Anna at that point.
Yes, still watching on the pound yen, and back onto the time chart here. We've gone into this. We're still really in this in this volatility candle. It has to come out of the volatility candle. Then it's got to get through the the resistance that provided the pullback on the move just before the London Open, and we can see here as well. I mean, the move higher that was that was brought to a temporary pause just before London. I mean, the trend monitor is still blue. It is still in play as it were. But to continue higher, it's obviously that's where it's got to break. And on the hour as well, as I said, this is still, as far as the hourly chart is concerned, this was just a minor blip caused primarily by the London market opening. It's still going to. The resistance line here is 148.16. Not a huge number of pips, but it's still, that is a potential pause point for the pair. And again, it's going to need some volume to get through. Longer moving, looking ahead on the chart, the key level here is actually 148.52, which is where the volume point of control was, and in fact was the trigger for this move lower. This is huge volatility candle, a lot of basing, a lot of spiky price action in this congestion period, which you would expect with the pound yen. But the support line was about 147.26. As I said, you have got to be a little bit flexible with the with the levels in terms of how you are going to use them. But in terms of how the indicator works, it is very, very precise. It actually came in at 147.26. So we'll see what happens with that as we move into the London session. Now, actually, that brings me to a very appropriate point, because one of the things we're working on at the moment is, given all this, what's going on with the pound, what's been going on with the pound for the last couple of years, we've now actually been developing a pound index. We have a euro index, we have a yen index, we have a dollar index, but for some time we thought, you know what, we really do, with the British pound, it's just so important at the moment. The Brexit negotiations are coming to a head, as it were, but it's not ready yet for Ninja or MT4, MT5, because what we've actually been working on are some indicators for Trading View. They're still very early days, but the pound index is one that will that's come through, and it's looking pretty good, David, isn't it? Yeah. And we'll be rolling that out with the onto the other platforms as well. And while I've been speaking, here he is. They're kind of rowing back the politicians. They will reduce the debt over the next few years. So it's all about the deficit and debt. I think ultimately, I think the Italians will just fall into line, for the greater good of the Euro project. Anyway, right. Indicators and how we operate the packages and the indicators that we offer for the different platforms, all available. You can scope them out over at quantumtrading.com. In fact, if I bring that, but actually, let me just bring up where is it? There we are. This is the site, quantumtrading.com. You will find details of everything. We don't talk about all the indicators in these sessions. There's a clutch of them there that you can go and explore. The only thing we do say is that if you invest in the full package of indicators, whenever we develop a new one, as we are doing now for the British pound, it will automatically be added to your package. So the cost of the package increases all the time, but you will only ever pay us. This is for MT4, MT5, 894. And for NinjaTrade is slightly more expensive because there are more indicators in that particular package, but you don't have to buy the complete package. You can buy one, you can buy a little bundle of indicators, and if you then upgrade, you'll always be given a credit. But the reason I highlight the site is there are a ton of videos on there which actually explain how how to configure the indicators and some ideas of how you can use them. And the indicators are also part and parcel of our forex trading program. So let's go back here. So that's quantumtrading.com. As I said, you can just buy one, you can buy a discounted bundle, or you can buy the complete package. It is a lifetime license, all free upgrades, as I've said. With NinjaTrader, there is a Camarilla and there is the Renko Optimizer, which we will do a webinar on as well. But you also get a 7-day money-back guarantee, 24/7 support, 365 days of the year. You can transfer from platform to platform. There's no charge for the transfer, but if you go from MT45 and then you go to NinjaTrader, there is a slight difference to pay because there are more indicators on Ninja. And as I said, indicators for free, MT4894, 1197 for Ninja, and they're both available on EPP. This is where we are at the moment. This is a screenshot from the Quantum Trading Education site. The cost of the program is 1391 for MT45, 1694 for MT45, but it doesn't, as I said, includes the indicators. There's video podcasts, there are lots and lots of downloads, a ton of material on there for you to work at your own pace. And the sites again, Quantum Trading Education, more than welcome to email me, anna@annacooling.com. I know I put help desk there at quantumtrading.com, but David has an email, it's david@quantumtrading.com if you want further information. Is there anything else you want to add to that, David? Have I? Okay, do we have a volume indicator on TradingView now? Not at the moment. We are literally just working on we've just started with TradingView. So it's going to take us, I don't know what time it's going to take us, but you know. We have to do all the support pages. And also the indicators are sort of the easiest part for us. What takes the time is all the support pages, as I've shown you on the site. If you go over to explore quantumtrading.com, as I said, the amount of information that's there about the indicators, we do like to give as much support to our customer. Scroll up to the top. Scroll up to the top. Yeah. There we are. There's videos here, there's videos on everything, there's on the platforms, the individual indicators, you know, we add to it all the time. This is actually what takes the time. The development of the indicators doesn't actually take a lot of time, but it's everything else that needs to be built around it, but we will be working as quickly as possible. Right, we have gone way over time this time, but all I can say is thank you so much for staying with us. I hope you've enjoyed it. I hope you've learned something that perhaps you didn't know before, and we are back next week. This time next week, David? No, Tuesday. Not sure actually, but it is the London session, and you know, just keep an eye out on your email. It'll either be Tuesday or Wednesday. I have a feeling it's Tuesday. A lot's going on in the forex market. As always, there's always something going on, but keep an eye on the euro and certainly on what's happening with Brexit. But whatever you do, have a great trading day. Enjoy the rest of the trading week. Stay safe, and we'll see you next time. Take care.